Well, everybody, in the excitement of everything I was doing, I forgot to actually do what I was supposed to do, which was to prepare the common size financial statements for these companies. So let's go ahead and do it. So right over here, to make a common sized financial statement, what we're going to go ahead and do is we're going to add columns in between each of these. And we'll also go ahead and do this for the income statement. Okay, so do the same thing for Dollar Tree. As we kind of mentioned before in the last video, we had those issues with the percentages, but we'll kind of address those as they come by. And let's go ahead over here. Okay. So to add a column here, I'm clicking on the column, I right click, and I basically say insert one column left or right. That's all you're doing. Okay, so to do a common size income statement, what we're going to do is we're going to divide everything by revenue. Okay, we're going to do nothing with earnings per share because this is on a per share basis, right? What we're going to be doing here is we're going to be dividing everything by total revenue or sales. So I'm taking the 40 million, dividing it by itself. And I want to show this as a percentage. Okay, I come over here, 28,594,811, divide it by this, show it as a percentage. Now, if I want to go through and to make this a little bit easier on myself, the problem is if I copy this and bring this down here, it's dividing it not by sales, but it's dividing it by cost of goods sold. So what I need to do is I need to fix the value it's being divided by, meaning that I only want it to be divided by cell C7 as I go through and do this. So I'm going to put a $sign before the C and before the 7, and what that's going to do is it's going to fix what I'm dividing it by. And as you can see, even on this one here, it's not changing that C7. Okay. Now, when I come over here to Dollar General, what I now need to go through and do is to do the same thing, but I have to do it separately every single year. So I'm going to again put these little $signs here by what I'm dividing it by. I change this to a percentage. And I'm going to go ahead and do this as we go through here. Wanted to make this to look a little bit nicer, and then just have it basically with no background. And now over here, I'm going to go ahead and divide this by itself. I'll put this as the absolute value. And then I'm going to go ahead and make this as a percentage. Okay, so I'm going to go ahead and put these down here. Had another income or expense in this one particular year. I'm now down to 6.38. So as you can kind of go through and see, this is kind of their income is increasing, but obviously their net income is not. So this is going to be something we're going to be going through and exploring for Dollar General as we learn more about them. So for Dollar Tree, for their income statement, I'm going to go through and do the same process. I'm going to go ahead and divide it by itself. I'm going to change this to be as a percentage. And I'm just going to go through, do it through the net income or the net loss. Change this to a percentage. Again, we're doing this for the income statement right over here. I'm ignoring the earnings per share, right? I'm not going to pay attention to that right now. Okay, so over here. Okay, so do this as a percentage. Okay, so now I've made common sized income statements. And one of the things you can kind of go through and tell is that, well, wow, these look horrible, but these include discontinued operations. And the number I would really want to focus on is the income from continuing operations, right? Why does Dollar General not have this? Well, they didn't discontinue any operations. Remember, There's an inherent assumption when we're preparing financial statements that everything is from continuing operations. This is an intermediate accounting concept that you would learn in your first semester of intermediate accounting. Coming over here, though, there's obviously a concern, though, for Dollar Tree. Why is there a concern? Well, the income as a percentage of total sales is going down. But as we can also kind of see over here for Dollar General, it's also kind of going down as well. So it may just be something in the particular sector. Inflation, could be wages. We'll find out soon. Okay, now when it comes to doing the common sized balance sheets, okay, for this one, we're going to be dividing everything by total assets. Divide everything by total assets. So I'm going to take the cash and cash equivalents. I'm going to divide this by my total assets. Now, to make this easier on me, I'm going to put a little dollar sign, no pun intended, for these companies in front of what I'm dividing it by. So that way that value stays fixed. Right over here. So my cash and cash equivalents is 3% of total assets. I'm going to bring this down over here, total liabilities, and this. So my total liabilities and equity has to equal total assets. There we go. Do the same thing over here, dividing this by over here by total assets. Put this here as a percentage. Again, if you copy this formula over here, it's not going to turn out well, right? And the reason why it's not going to go through and turn out well, because it will basically copy over this value because that value will remain fixed. So I'm going to divide everything over here by total assets for that particular year. I'm going to change this to be a percentage. I'm going to go ahead and copy this down. Okay, so right over here. And again, you should see 100% down here. Okay, so now Dollar Tree. This is the funky one because we had the issue with the discontinued operations. So we're going to divide this over here by total assets. And when we do this, we're going to put the dollar sign in front of it. And we're going to go ahead and make that into a percentage. So I'm going to go ahead and copy this down over here. And we should get to that 100%. Also going to do this over here, dividing this by total assets. And again, I'm going to want to put the dollar sign in front of it to make sure that I'm doing this correctly. Okay, now I'm going to go over to the 2 prior years, right? So as we said, with this particular company and this particular issue, because they had discontinued operations, right? So they had to restate their financial statements. So we're just going to go ahead, and we couldn't find the right one. So we're just going to go ahead and do it for both years. Okay. Go ahead and do this divided by total assets. Okay, so that's how we go through and make common size financial statements. To recap, on the income statement, we're dividing everything by total revenue. We leave the per share stuff alone. On the balance sheet, we're dividing everything by total assets. Remember, the trick though is if you use the dollar signs, you got to start fresh with your percentages. So in any event, thank you for being here for part 2 of this video, and I will see you on the next one. Have a great day.